Mars, the iconic global confectionery, food, and pet care giant, known for household names like M&M's, Snickers, and Skittles, has just sealed a monumental $36 billion deal to acquire Kellanova, the maker of beloved snacks like Pringles, Cheez-It, and Eggo. This acquisition is not just another corporate transaction. It's one of the largest deals of the year and represents a significant expansion for Mars into the savory snack market, including supermarkets, chips, and crackers aisles. The details of the deal are as staggering as the price tag. Mars agreed to pay $83.50 per share in an all-cash transaction, which also includes taking on over $6 billion in Kellanova's net debt. This price represents an impressive 69% premium to where Kellanova's shares were trading just a few months ago. For Mars, a privately held, family-owned company with a long-standing history in the candy and pet food sectors, this acquisition marks a bold move into new territory. But why is Mars willing to pay such a high price for Kellanova, especially in a market where consumers are increasingly favoring healthier options? To understand the strategic importance of this deal, it's essential to look at the current landscape of the snack and food industry. Over the past few years, Mars has been diversifying its portfolio beyond the traditional sweets that made it a global powerhouse. With this acquisition, Mars is not only expanding its presence in the snack aisle, but also positioning itself to meet changing consumer demands. While sugary snacks have long been Mars's bread and butter, the addition of Kellanova's brands allows the company to tap into the growing market for savory and convenient snacks. Pringles, Cheez-It, and Eggo are not just well-known brands, they are staples in households across the world, offering Mars an opportunity to deepen its connection with consumers in new and exciting ways. The timing of this acquisition is particularly interesting. Mars's decision comes at a moment when consumer behavior is undergoing significant shifts. The COVID-19 pandemic has dramatically altered how and where people eat. During the pandemic, there was a surge in demand for snack foods, as more people spent time at home and turned to comfort foods. However, as the world begins to emerge from the pandemic, the economic landscape has changed. High inflation and rising interest rates have squeezed consumer budgets, leading to a slowdown in spending, particularly on non-essential items like snacks. Despite this, Kellanova has managed to navigate these challenges successfully, recently raising its full-year sales forecasts after exceeding earnings expectations. This resilience likely made Kellanova an attractive target for Mars, which sees potential in leveraging its global distribution network to further boost the sales of Kellanova's brands. Mars's CEO, Paul Weirock, expressed optimism about the future of the combined companies. He emphasized that the acquisition of Kellanova provides Mars with a substantial opportunity to develop a sustainable snacking business that is fit for the future. The deal is not just about expanding Mars's product lineup, it's about positioning the company to meet future challenges and opportunities in the global food market. By incorporating Kellanova's portfolio of strong, globally recognized brands, Mars can diversify its offerings and reduce its reliance on the sugary snacks that have been the cornerstone of its success for decades. The acquisition of Kellanova is also expected to bring significant changes to the leadership and organizational structure of both companies. Andrew Clark, the current global president of Mars Snacking, will lead the newly combined division under Mars, signaling Mars's commitment to integrating Kellanova's operations smoothly and effectively. Clark's leadership will be crucial as Mars works to optimize the synergies between the two companies, from supply chain integration to brand development. However, this deal is not without its potential hurdles. Given the size and scope of the acquisition, it is likely to face significant antitrust scrutiny, particularly from competition watchdogs in the U.S. President Joe Biden's administration has taken an aggressive stance on mergers and acquisitions, especially in industries where consolidation could limit competition and harm consumers. Mars has acknowledged these challenges, but remains hopeful that the deal will be completed by the first half of 2025. If successful, this acquisition could set a precedent for future deals in the food and snack industry, encouraging other companies to pursue similar mergers as they seek to adapt to a rapidly changing market. Deal-making in the food sector has seen a sharp decline in recent years, partly due to economic uncertainty and shifting consumer preferences. However, Mars's acquisition of Kellanova could signal a resurgence in merger and acquisition activity as companies look to consolidate and strengthen their market positions. The food and beverage industry is at a crossroads, with companies facing increasing pressure to innovate and meet the evolving demands of consumers. As health consciousness continues to rise, and as more consumers seek out convenient on-the-go snacking options, the ability to offer a diverse range of products will be key to staying competitive. For Mars, this acquisition is more than just a business deal. It's a strategic move to future-proof its operations. The company, which is one of the world's largest family-owned businesses with annual sales exceeding $50 billion and a workforce of over 150,000 employees, is making a calculated bet that the addition of Kellanova's brands will not only diversify its product offerings, but also enhance its global reach. By bringing Kellanova into the fold, Mars is positioning itself to be a dominant player in both the sweet and savory snack markets, with a product lineup that caters to a broad spectrum of consumer tastes and preferences. In conclusion, Mars's $36 billion acquisition of Kellanova is a landmark deal that could reshape the landscape of the global snack industry. As Mars integrates Kellanova's iconic brands into its portfolio, the company will be better equipped to navigate the challenges of a changing market and continue its legacy of growth and innovation. While the deal faces potential regulatory hurdles, its successful completion would not only strengthen Mars's position in the snack industry, but could also pave the way for further consolidation in the sector. As the industry watches closely, Mars's bold move underscores the importance of adaptability and forward thinking in an increasingly competitive marketplace.